Good morning, John. How are you?
Hey, Ryan. Doing well. Happy to be here. Look forward to our conversation.
Yeah, me too. This is round two. So for the listeners in, we gave it a good old boy try the first time, and we had technical difficulties. And both you and I are familiar with podcasting, so we're like, you know what? Let's just do it again. So I'm very excited for this conversation. And I'm just going to let you kick it off in a little bit of your background, John, and how you got into franchising and why franchising. And then there's a lot of different angles we're going to take with this conversation. So I'm excited. But why don't you just give everybody the Cliff Note version of what you're doing and how you got here?
Yeah, absolutely. And thanks again for having me. So my background, first off, I'm based in Atlanta, Georgia. I live here in the city with my wife and 3 young kids, and stay active and always something fun going on. But background, spent most of my career in the corporate world, did some international work, and then went on to grad school. And after that, had a great run, like so many in the corporate world, but had an itch. I got to my mid 30s and wanted to do something a little more entrepreneurial. And at the time, I defined that as moving from a public company to a private company situation. So I had the opportunity to step in as president of Shelfgenie franchise system. It's custom pull-out shelving for your kitchens and pantries all around North America, and had the opportunity to support our franchise owners, all the different marketing aspects, the call center, technology, product development. And really that experience showed me firsthand this world of entrepreneurship through franchising. And long story short, ended up spinning off with my business partner, and who was the founder of Shelfgenie. And and Shelfgenie has actually gone on to become they're an Inc. 5000 company. They were recently sold to Neighborly. They had a big exit. Wow. But Alan and I spun off, and we brought in another business partner, and we've now got investments in several franchises ourselves, primarily in the property services spaces where we've placed our investments. But so, having been a franchisor, now multi-brand franchisee, fortunately, we've got good people running those businesses for us. And so it allows me to spend about 90% of my time on the consulting side. So I work with about 300 franchise brands across the country, across a wide range of industries, largely in the non-food space, as I call it. What I find is oftentimes people associate fast food with franchising. And so big piece of what I do, big piece of what I do is get out there and educate, like yourself, Ryan. We do a lot of speaking and having conversations like this, helping people come to the realization that I did, that there's a world of opportunities that are oftentimes not on your radar. So the way it works is when I engage with a client, I take them through a pretty streamlined process, present them with the opportunities, 6, 7, 8 opportunities. We try and narrow it down to 2 to 3 to then actually engage with the franchisor. So we take the whole world and the whole universe out there, educate them some, and then make it more manageable. And we do a lot of placements, and I just love what I do, getting to play matchmaker.
I love it. And so, to kind of set some context too, because like when I saw some of your material out there, you and I both know Elliot Holland, and then I saw that you were on Bigger Pockets. And like the thing is, what I think is relevant for the listeners in, as before they're quick to judge a franchising, which is why you're here to kind of demystify some of this, is that because of the wide variety of the listeners, you could be investing in franchises, you could franchise your own company to scale. And you could, instead of buying a business as an acquisition entrepreneur, you could go in and buy an actual franchise to have a different take on it. So I think we're going to cover the kind of the spectrum of the different angles. And so before we go into any of those particulars, John, like when you do a huge amount of effort behind non-food. So why don't you explain that, and like what is it like when you're talking franchises that are non-food, and why did you get passionate about it?
Yeah, so I'd say first that was my experience. My background is in non-food, and I often say there are a lot of ways to make money, and some are easier than others, some are cleaner than others. And my interests lie outside of food, and really about 95% of my clients are looking at opportunities outside of food. They don't like certain aspects around it, and however, it's a great space, and those 5% that do want to go for it, I mean, certainly a substantial part of the economy out there, and it's growing, especially coming out of COVID here. But no, we cover a lot of other industries. From I just did a 10 location oil change deal last week. So the automotive section had some uniques about it. Property services, home services have been absolutely on fire. Mm-hmm. There are a lot of models out there around health and wellness, around B2B services, B2C services. Just these massive categories that oftentimes are not on people's radars. In fact, I'd say over 80% of my clients end up in an opportunity that they had never heard of and was never on their radar, probably in an industry they have no background in and had never considered. But once we peel back the onion and understand what they want their day-to-day to look like, what their goals and objectives are, what they enjoy doing. Do they like small teams? Do they like large teams? We're able to kind of match them up to the right opportunities that I see resonating with others around the country with similar profiles to them.
So why did you get into franchising? And like especially in the context behind the question is I don't know if you're familiar with Walker Dial, it's a friend they wrote
Yep.
Buy Then Build, and like, with an SBA loan, you can go out and buy a lot of these small companies and or get some seller financing. A lot of people out there teaching this. Why franchising? Or what's your passion behind that? Especially coming from the corporate world and some of the consulting world with you kind of I think you had a better understanding of the opportunities. So yeah, why franchising?
Yeah, well, and I'd say why franchising. First off, it's not for everyone. I have quite a few. I'm a member of the Entrepreneurs Organization. I know you're very familiar over there. Business owners that have built successful businesses would not be good franchisees. Now, some are. A lot of them are clients of mine, but some of them would not be. They wouldn't put their thumbprints all over a business. However, for so many others, they recognize that the franchising provides them with some really big pieces that help them start on third base, not first base, if you will. To sound cliche, there, the playbook. I mean, it's a proven model. It's worked in other markets. Then you've got a coach on the sidelines in that franchisor who has aligned interest as you, and the better you do, the better they do. So they're providing that support, and then so you're in business for yourself, but not by yourself, is what I like to say.
Mm-hmm.
Then oftentimes it's overlooked, but you've got franchise owners around the country that or around the world that have tested some of those same marketing vehicles that you're considering. So maybe you can learn from their mistakes or learn from their wins. And again, the better you do, the more valuable their location is as well. So again, it aligns those interests. You've got that support system and that network. In some cases, you are able to leverage buying power on the back end or leverage vendor relationships because you are buying in mass, let's say. So no, again, it's not right for everyone, but I think more and more people are wising up to what it provides. And one other thing is the exit piece. I mean, you see private equity oftentimes buying at the franchisor level. I mean, 2 Minute and Truck was bought 2 weeks ago by Rourke. I mean, a lot of
Mm-hmm.
deals happening, and I've got private equity firms call me every day saying, "Hey, who are some of those emerging franchisors that we should have on our radar that would potentially have an interest?" And so I'd say there's that piece, but also the franchisee level. In some cases, private equity comes in and buys a large swath of franchisees, or they'll get bought, come in and invest in the franchisor, and then they buy them back as corporate locations. And so the Riker School of Business, I think this is really interesting, did a study over the past 10 years of over 2,000 companies across the US in similar industries in which they had a franchise comparable and a non-franchise comparable, just a startup, if you will, traditional business. And what they found is that the franchise businesses traded a multiple of 1.5 times the non-franchised counterparts. And so
Hmm.
obviously every instance is different and there's different factors that go in, but by and large, you're able to benefit by building that asset and having that exit.
So, and this is why I'm super excited to talk about like the different layers of this because I've got clients right now that are the franchisor. I've also got clients that are in the master level, which is in between the franchisor and the franchisee. And I've gotten, a complete the different perspective and education over the last year and a half on the different angles of this. And like, maybe we can just start with some of the the myths behind it. Cause like, I've seen other people where like, if they're the franchisee or master, where it's very difficult for them to sell because they've got this like let's talk about like the narratives that go on. Someone's telling me what to do. I'm paying them a 5% royalty and they're not giving me anything. They've got the first right of refusal in the sale of my company. And I built this whole thing up for someone else to have a lot of say in my ultimate end goal. So like, I'm sure you hear this all day long.
Yeah, so I think that's part of the vetting process that we do up front. I mean, we've already done a lot of the hard work. There's a world of 4,000 franchise brands in the U.S.
Is that how many
We've
there are?
and it's growing every day.
Hmm.
And, you have some that failed and some that come in. But when you narrow that down to those without food, which is where I spend most of my time, food and lodging. I play outside of that, and then we vet them even further down. I mean, there's about 300 that we work with, and these are ones that I was down in Florida a few weeks ago with 150 of them, and really digging under the covers for a week and understand what they've got going on and what's coming down the chute. So
And you're talking about like the actual franchisor. So that way, if someone's coming in, you're understanding like if I want to go and actually either invest or buy one, what the legitimate,
exactly,
person on the other side of the table is like.
yeah, what's their unique proposition in the market? Where are they going from a growth standpoint? What's that track record? And I always tell my clients, if that franchisor, say it's an emerging brand, doesn't have prior franchise experience, they're just an industry guy or gal, then it's important to me that they bring in franchise expertise from the outside to supplement,
Hmm.
their knowledge, because franchising can be a different animal, and you want to have a franchisor that understands how to support franchisees. They've got to be committed to
Right. Not
innovation.
just clip coupons on nothing.
They've got to be committed to, to really making that brand and that entity more valuable for you. And they need to constantly be innovating. I mean, having been on the franchisor side with Shelfgenie, I kind of know what to look for. And so I've
Hmm.
got relationships with most of these franchisors I introduce to my clients, because ultimately that is the most important thing. And, yeah, everyone's going to have some story, just like you have some story of non-franchise businesses too,
100%.
that, where there was a challenge and there was a unique situation, and maybe they didn't live within the bounds. I mean, any good franchisor is going to allow you to test things. They're going to allow you to innovate in your local market, and then if it works, you can bubble it up. So,
Well, they want the
um,
ideas, right? I mean, if they're a normal, good leader, and I think the purpose, just to clarify, that wasn't my opinions, because I hear the same stuff, John, about
yeah,
private equity firms, and what I say, if
yeah,
you've seen one private equity firm, you've seen one. And so, like, same thing with ESOP, same thing with any of these concepts.
yeah,
That's the whole point of this show, is just like, let's break this down, and again, because people can make intelligent decisions. And what I think is super interesting about franchising, that I've learned over the last 18 months, is that the big part, that when I started this podcast 5 years ago, is most people don't view their company like a financial asset, and they don't have the professionalism behind it. And franchising, whether you're a franchisee or you're a franchisor, it forces that for everybody, which is just good for everybody.
yeah. No, absolutely. And oftentimes that's what you see. I mean, in some cases, there's a business that I'm working with right now where they have a patented technology, within that franchise system, which is their differentiator in their space. But oftentimes it is, let's say a fragmented space. Maybe it's a blue collar industry. And you're coming in, bring that professional approach. You're bringing in the technology, the marketing approach, and you're able to differentiate it. A good example, there's a insulation business that's done 200 placements in the past 18 months. It's just been on fire. I got to know
Describe
the found
placement. Sorry, describe
placement.
placement, and then
Someone,
keep. Yep.
oh, yeah, or deal, if you will. Someone
Okay.
buying into a location. So, a new franchise owner coming on board. I got to know the owner, Scott Marr, a couple of years ago. Great guy. He had built up the Fleet Clean franchise, had a big exit there, brought all that knowledge into what he saw as a highly fragmented space, the $52 billion insulation industry. Built the brand,
Holy crap.
built out proprietary product, big old training facility, brought in-house, the marketing teams, call center. And we've seen Harvard MBAs buying into this. I saw an MIT grad buying in. I mean, it's resonating with people that don't have any background in the trades,
I
but
love
they're
it.
viewing it as a business owner and stepping in. And so, that's just an example. I mean, there's dozens of opportunities like that. Again, in industries that you never thought you would be in.
That's awesome, and I think, what's interesting, the people that are listening that are looking to go on acquisitions too, because again, the biggest question is, if I'm going to go buy this company, where's the risk? What's going on? Is this cash flow like sustainable, predictable, and transferable? And you have to go through so much to identify with that, versus, like you said, looking at the playbook and then looking. I mean, you just have a better understanding of what the due diligence is going to look like. So speak to the franchisor level. What I find super intriguing, John, is that, so I got two clients that have chosen the franchisor route. And like, the ability to scale is really intriguing to me, especially when you think about, if the non-franchise or route, and the working capital and the investments that you need, most people, like, they run into problems with that. So that's why they end up looking for growth funding or private equity. But this is a whole different whole different playbook that I'm fairly intrigued by. So, explain, like, why someone would, and what are the benefits?
Absolutely. No, we see businesses and models that you would never have thought could be franchised that make a lot of sense when you kind of boil it down. Now, I'm helping a number of companies now through that process. I don't personally take them through the FDD setup and all that, but I've got great resources that do, and that I point them over towards. But no, a lot of the conversations I have with business owners are, is franchising right for your business? Is that the best way to scale? So, first let's start with the cons. What I share with them is, you wake up one day and all of a sudden it's great that you've scaled the business, but you've got kids all around the country that now have expectations of you, and you're trying to keep the kids happy, try and get them, playing nice together. And of course, they're always griping about some vendor that you're bringing in from the outside. So, it does definitely change your day to day, especially if you don't have any background in it. Again, I would encourage you to bring in an outsourced sales team, bring in some other franchise expertise. But on the positive side, you're always wanting employees to act as owners, right? Well, now all of a sudden you do have truly true owners around the country that know their local market, that have skin in the game. they're largely using their own money to fund the business, and so you're not having to come out of pocket for as much. And but you're providing support to them day in, day out. Again, from an exit standpoint, you're able to scale faster and probably larger. And private equity just inherently loves franchising. I get calls, like I said, all the time. They love the oftentimes predictable revenue model. They love the fact that you can scale using other people's money or SBA, the government's money in that case. And so there's a lot of intrinsic factors, and so we do see more and more businesses raising their hands saying, "Hey, should I consider franchising?" And I can just cite case study after case study of that.
Well, and let's. I don't know if you got a one that we can pull the thread on because I think it is truly intriguing because and we don't shy away from technical details here because like when I think about like if someone wants to open up a new market like and then this will tie this back on why franchising loves it because of the value that's there. But like so I've got a business and then I'm going okay I want to open up a new market or I want to in that case, I'd have to find a GM or someone that's expensive. I'd have to fund the inventory and then the payroll and then the location. And that's a lot of working capital. Most people are going, where do I get that? Which is why I've had people on the show talking about non-controlled capital because of, the challenges and the constraints of financing. But you're getting a lot of these, like, so explain like literally how someone would roll that out because and how someone uses someone else's money and how you would monetize like a different location if you were to franchise.
Yeah, absolutely. So let's take. I'll take one of my partners' companies. A guy named Alan Young. He has a business called Art of Drawers, very similar to Shelfgenie, with some
I
nuances.
love these names, by the way. Art of Drawers and Shelfgenie. I just love
It's great. It is great. It's good stuff. So in his case, he's got the production set up on the back, and he's got the manufacturing. Obviously, the more that he orders, the more of these wooden boxes, the better pricing he gets. So he gets that bulk rate. And so, one strategy he can go with, currently based in Atlanta, would be let's go open another market in Nashville. Let's go open one in Charlotte. It could go the corporate route, which he may do. I mean, right now he's thinking about doesn't make sense to franchise, or he can take the business and out of the gate. Hey, we have a successful prototype here in Atlanta. Here's the reasons why we believe it's successful. Here's how we're going to support our franchisees on the marketing side with our marketing team. Maybe provide them with a call center or do that down the road where they're able to book appointments. We're handling all the production. We've got the technology systems. You're able to go in, approve your orders, watch the order through the process. We're tracking all of your marketing spend, getting the ROI, all those little pieces behind it, really making it a valuable proposition versus someone, let's say someone in Dallas buys into it. Well, what value are they getting beyond the brand, beyond the production? It's going to be all this additional support that the franchisor is signing up to in that FDD, the franchise disclosure document, which is regulated by the Federal Trade Commission. So you've got to cross your T's, dot your I's. I mean, the government looks out for
Mhm.
small business owners, but it's saying here's the expectations you can have when you buy into our system. Here's how we're going to support you. Here's kind of what you can expect to make. It's called the Item 19 of from a financial standpoint. So they roll that out. Say the guy opens up in Dallas, buys into the franchise. Oftentimes, franchise fee for the first location is $49,000. Just seems to be the magic number. Next location might be 39. Next one might be 29. And so, that could be defined as 300,000 in population, 50,000 homes of 75,000 income and above. Lots of different ways. Number of addressable businesses if it's a B2B type business. Of course, if it's brick and mortar, then it would be maybe a 3-mile radius around your location.
Mhm.
So anyway, let's say the Dallas guy buys into 3 territories, starts marketing in one, and then over time opens up those other territories. On his revenue, he's probably paying, give or take, right around 6% of revenue back to the franchisor as royalty.
Mhm.
However, what support is he getting for that? Here's the list of things that he's getting.
Mhm.
And then, of course, he's getting coaching and operational support, all of that as well. And so he built out that business. The franchise owner or the franchisor here in Atlanta, my partner, Alan, yeah, he makes some money on the franchise fee. And that guy pays 49 plus another 39 plus another 29. However, a lot of that gets eaten up as a sales and marketing expense because he's probably paying someone like myself, a consultant, to go
Mhm.
out there and market it and sell it for him. And so you're not going to get rich as the franchisor off of your franchise
Yeah,
fees.
you're not sitting there drooling over the 200 grand. I mean, because you're paying operation expenses and whatever to roll it all out.
Well, and I'd say your first couple of franchise owners, those royalties are largely paying to keep the lights on back at the home office. You pay your marketing team, pay your support team. Now, over time, once you get that critical mass, the royalties can really add up. But in the case, for him, here with that business, where he makes his money is on the markup he takes on the manufacturing or on the supply chain piece of it. So he's producing it for $20. He's charging the franchise owner $40. Franchise owner is charging the client $200. Because it's part of a solution. They're not looking at it as a wooden box. It's part, it's
Well, those
customized to the
manufacturers could
millimeter.
have one sale to like everybody.
Exactly. So there's a lot of synergies, that one to many relationship. But when Shelfgenie went through their transaction, I guarantee you what was most attractive from a P&L standpoint was the markup that they took on the manufacturing piece. That's just how it works. And so I always tell new franchisors, let's figure out how you're going to make the money. Obviously, the exit down the road can be very, very attractive, but along the way, it's the markups that you take, and it could be on the marketing you provide. You may say, "Hey, we're going to have charge you an extra 2% of all of your revenue, to pay for the marketing, and take a markup on that." So it's that vertical integration piece where you can really do well on the franchisor side.
So many things there that I want to unpack because, so a couple things. Well, one thing that I think is interesting when someone has the shift in mindset, we're like, hey, I'm gonna build a machine that kicks out cash, commercial cleaning, or whether it's a professional services consulting company or a manufacturer that is a tool and die shop. If they've truly gone through the effort to go, okay, this is a machine. I want to build normalized EBITDA that's sustainable, predictable, and transferable. They're thinking about it like a financial asset. They've done the hard work to do what you're talking about, John, which is standardize operations, standardize your hiring process, standardize sales and marketing, standardize finance and legal. So you become good at a business versus creating or doing something. And so then the big question that I see is people go, then how do I scale this to increase my EBITDA, increase my multiple? And what you're talking about is using other people's money. And to think about I did some basic math. You're clipping coupons on the 6%. So you're actually monetizing your ability to build a business, not just have a widget. And then you're talking about the vertical integration too. I can only imagine the normalized EBITDA of a franchisor and the system is extremely nice to look at.
It can be, but like any business, I mean, it doesn't always work out. I mean, you look at the franchisee side, I mean, there's stats out there to show, 75, 80% of franchise purchases do work out. Of course, the numbers on non-franchise. So, it's not a totally fail proof. I mean, still it comes down to people. In fact, that's one of the things I used to tell Shelfgenie franchisees when they would come through our training process was, they would say, gosh, you guys do this for us. You do this for us. What do we do on a day-to-day basis? And I always explain your success is going to come down to your ability to work with people. It's your ability to attract and hire quality talent, to be able to retain and incentivize them and make tough calls when needed. But ultimately, that is the key skill set really across all businesses. And, we see some people going into that owner operator role. Sometimes they may start out without an employee. In a lot of cases, we're working with semi-absentee investor types that quite a few of those out there that say, hey, I'd love to see, I think of franchising as an asset class. That's a conversation that we
Mhm.
oftentimes have. And, looking to diversify. And they, I tell them it's going to come down to having a good general manager to run that day to day for you. And you may have to cycle through 2 or 3 of those. I mean, that's kind of the pain point. As a business owner, there's always whack-a-mole. I'd say right now, when I look at the landscape out there, it
Yeah.
is, there is so much customer demand, but it's the labor side. It's finding good people and being able to plug them in. So I do have a lot of clients right now that say, what's the highest ROI I can make with the fewest employees? That's kind of how they're looking at things. But, franchising in general, I mean, right now we're seeing, I don't know if I'd call it a renaissance, but it's pretty close to a renaissance. I mean, our
Mhm.
deal flow year over year is well over 50%. And last year during COVID was 50% over the previous year. I really think, and you see this firsthand, Ryan, outside of franchising as well. I think COVID's caused a lot of people to question the path they're on and say, maybe
Mhm.
now's that time to scratch the
Mhm.
entrepreneurial itch
Mhm.
and jump in the game. So it's a lot of fun. It's also really competitive. Great brands are going fast in markets.
That's awesome. Well, and I think what's interesting, and you make a really good point too, because when I was talking about building the machine and being the franchisor versus being the franchisee, where it's about the people. What I think is with it, and again, it's all depends on what angle you're talking about. Are you trying to be a franchisee or a franchisor? And there are so many people that I've come across where I just really love the people, but I just don't like the business stuff. And that could be an indicator of hey, I might want to be a franchisee where this is a business in a box, and then I can actually focus on my people, not building the machines, the operations, and the systems, the process. So it's really very it's more clear on what side you should be on depending on what you gravitate towards, which I think is interesting. When you talk about how if you're a franchisee well, this is for both sides. If you're the franchisor and a franchisee wants to sell what they've built, so let's say you like someone was super successful in the marketplace, how do they deal with their franchisees selling? And if you're a franchisee, what are the pros and cons, limitations, and like how does the bottom part, that second layer, how does the turnover of the not the turnover, but the transitions and the exits work?
Yeah, you put yourself in the seat of the franchisor, and you've got a franchisee in Phoenix that wants to sell, and maybe they're retiring, maybe they're moving, maybe they've had an illness, maybe the business isn't what they hoped it would be. You do approve that sale, but ultimately, unless someone's bringing someone in that's like totally out of bounds, way off the tracks, and in most cases they'll approve that. I mean, there's got to be really a red flag. I'd say they're looking more for those reasons why they shouldn't approve them than reasons to approve them. And especially if that franchisee has been in good standing and has built that relationship with the franchisor, and it's an understandable reason, and they're not going to get out and start bad mouthing the franchisor. I mean, as long as you're playing nice, then it really doesn't pose an issue in most cases. And the franchisor will then take that new franchisee through training. They want to make sure that they're totally up to speed, and they'll typically prior to that go through the same discovery process. So I'd say we don't run into that being an issue too often, based on
Which
my
is super,
experience.
yeah, no, which is good to hear. And like so like when you talk about private equity getting into this, because like the when I think about institutional investors or professional investors, I mean, when you have someone else that's got the first right of refusal and you're going in and you're buying something, and I mean that is potential risk depending on how knowable it is. And over the last 18 months as I've gotten more familiar with this space, if it's a noble risk, then it's maybe not even a risk at all. It's just now you understand it. So like how are people viewing that? And like when you say that franchising is an asset class, I mean, are you seeing more funds flow this direction, or like what's your thoughts on it?
Yeah, I mean, on your second question first, I mean, we have record levels of cash sitting on the sidelines. Stock market's at an all-time high. Interest rates are low. Only so many good real estate deals really to be had out there, and so people are
Right.
looking for those alternatives, even outside of Bitcoin. And I think baseball cards have been making a
NFTs,
comeback.
man.
That's right. That's right. So people investing in hard assets, but you know, also with knowing what's on the horizon. I mean, inflation and taxes. Let's be honest.
Hmm.
Both
Hmm.
are going to be going up in time, and I do think business ownership, as many of your listeners would agree with, is one of the last bastions of tax beneficial strategies that could be employed. I also think in the case of inflation, I mean, you can raise your prices. I mean, we did that for one of our
100%.
businesses. We've got a couple of our home cleaning business, our pool cleaning business. We raise prices because we're having to pay more on the labor side. And by and large, our customers were pretty receptive because of how we positioned it. That hey, for us to get good talented people to
Yeah,
come
you
and
want
support
service?
you,
Good people that are happy.
we're going to keep putting good people out there, but we have to pay them, and everyone understands those macro factors. So that hits on that. But no, as far as the right of refusal, I mean, again, I haven't come into too many issues. A lot of my clients are buying into multiple franchises too, and so we talk about franchising as diversification strategy, but also within franchising. I mean, I've got a client the other day. He's the largest franchisee of 2 minute and truck moving service. He operates in 11, 12 markets now, and young guy, 39 years old. He and I did a couple of placements together last year, in totally dissimilar industries from where he's been, but he's built this organization. He puts young guys in these leadership roles, gives them a ton of responsibility, a little bit of equity, and says, go make it happen. You're talking about franchisor or franchisee. Oftentimes we see those being one and the same. I just
Hmm.
did a very large placement between Atlanta and Charlotte with some guys, and they're in the process of franchising their flooring business right now.
Hmm.
They also own a property management business. These guys are in their mid 30s. I mean, these aren't
Yeah, that's awesome.
always seasoned gray hairs. I've probably got gray hair more than half of my clients. And yeah, we also see, I was talking with a client of mine yesterday. He's a former CEO of multiple hospital systems, 63 years old. He tried to retire, and now he's saying, hey, I kind of miss I've been consulting, but I want to get back in the game. I miss the employee and customer
Yeah.
interaction. So we do see it come from all walks of life. We've done some deals with guys that are, I keep saying guys, but guys and gals in their 20s, 30s, 40s, 50s. It's really across the board.
It is so interesting because I don't know who it is here in the Twin Cities, but I think there's a big family office that owns like 240 Dairy Queens. And it's just like, and I talked to someone like, yeah, you would have no idea how much those Dairy Queens make, and you're like, well, technically you could have, like, if you truly, you could have a whole diversified portfolio of just different franchises, from food to like home services to, you could like almost recession proof your portfolio through
Yeah.
franchises.
Yeah. No, I talked to a franchisor yesterday. I'm going to invest in it's an artificial intelligence driven patented technology in the waste management industry.
Hmm.
And what I think I joked on a recent podcast episode, non-sexy is the new sexy now. People
Mm.
love these spaces, whether it be, dumpsters, whether it be, carpet cleaning. They love those types of businesses right now. And we're still doing deals for like IV drips and, other
Mhm.
concepts that I would define as sexy, but a lot of pull towards, in some cases, Amazon resistant or COVID resistant essential services. The Servpros of the world are doing great. Um,
Mhm.
I've done a couple of placements with those guys.
Well, it's like, I mean, if I see another article about another company that's going public that hasn't made money and has no intention of making money, and then you go over and you're like, wait, that dumpster company kicks out 4 million in EBITDA. We're like, okay, well, I guess I can get down with
Yeah.
that. I mean, it's just a whole different perspective,
And
right?
what I found is it is a different perspective, and people like going to the cocktail party now and being, hey, there are those folks that, own the porta potty business, but they live in the biggest house in the neighborhood.
You literally just summed up one of my best friends from college. They own a porta potty business, no joke, and they're a rental business. And we were golfing, and we go by the porta potty, and he goes, "Smell that? It smells like money." I'm like, "Your guy," and he was a CPA too, so he went from like
Yeah,
busy season to putting on Carhartts and boots, and
I
so
love it.
it's
I
so
love it.
interesting. What are the reasons someone wouldn't want to be a franchisee or franchisor? Like, yeah, I mean, what are the things that you go, okay, that's an easy indicator that it's not right for you?
Yeah, I mean, it sounds like a weird problem to have, but I mean, on the franchisor side, some are sitting on so much cash, it just makes sense to go open corporate locations themselves. I mean, obviously, even within the realms of franchising, I mean, you still have more control if you don't have franchise owners within, and so maybe it's just that long term strategy. On the franchisee side, again, piece of what I do is educate. I find just conversation after conversation every day. People are saying, I always thought of franchising as food. I didn't know these other industries existed. So I think the reason you don't see even more jumping in is just the lack of awareness. And so that's something I'm trying to change as a disciple of
Hmm.
franchising out there. Is just it's not right for everyone, but at least explore it. And
Yeah.
it's a great basis for comparison. I've got plenty of clients that go with Walker's direction of entrepreneurship through acquisition. Some of them will ultimately end up doing franchise deals. Some will buy the traditional business. I will say oftentimes clients come to me after going down that path and saying, once, it sounded great, but once we pulled back the covers and really understood what owner discretionary means in the P&L and trying to piece it together, it wasn't
Hmm.
quite what we thought it would be.
Hmm.
Um, but even within franchising, I mean, we do resales. I'm doing a 5 location resale right now in Atlanta for it's a STEM related business called Code Ninjas. It's coding and technology training and development for kids. I mean, who doesn't want that, especially coming out of COVID?
Right.
People
Right.
are investing in their kids. They'll invest in their pets. They'll invest in their homes. So, obviously we have an aging population. Where's the puck going, and where do we, how do we skate towards
Hmm.
it? And
Hmm.
those macro factors come into a lot of our conversations.
So, explain some of the resources like that are available. And I know you're playing a lot in this space, but like, I was shocked when one of my clients a while ago, they're like, "Hey, yeah, so now if I wanted a franchise, there's people that'll go out there and help me get a franchise in each marketplace." So like, I mean, there's people that are out there where you don't have to do all this on your own. So kind of walk us through like the different kind of components and the resources that are out there for the people that might not be aware of it.
Yeah. And first off, I'd say I am more than happy to jump on a call with any of your listeners. I love having these conversations, talking with, it's entirely free. I mean, whether you're on the franchisee side, I get paid by by the franchisors on back end sales and marketing costs. None of it gets passed on to my clients. So entirely free.
Hmm.
Same thing on the franchisor side. I don't personally take clients through the franchising process to franchise their business. However, I love talking to them about whether it makes sense. And then I've got great resources, multiple groups that can really do a soup to nuts approach. So, a big thing is getting your FDD, your franchise disclosure document done. It's big, intimidating, 200-page document, totally written in your favor, though, as a franchisor. But a franchise attorney can do that. However, there's a group that I work with oftentimes that will do the FDD. They'll also put together your marketing collateral and materials, your operations manual, your training manual, everything you need to kind of go out there and start selling franchises, like what the expectations are
Hmm.
from a candidate. And then they'll also, to your point, if you're interested, go out there and help you sell the franchises. They'll get you in the national publications, the franchise magazines. They'll get you at the franchise expos around the country and go and represent you. It's pretty turnkey. It's neat what all they've kind of put in together in a box.
Right.
It's very franchise-like. Here, you want to franchise your
Franchise, yeah,
business?
yeah, exactly.
Here's the magic box. But just some guys with great experience behind them. Many years of franchise experience that would say, "Hey, don't reinvent the wheel. Learn from us. Let's get you
And
started
it's
on
just a
third base."
percentage of like, if they close a deal, it's just a commission, right? Just on launching the marketplace or something like that.
For those guys. So
Yeah.
if to do all of that, I believe
Oh,
it's
I'm sure it's probably a little bit. Okay.
$50,000, and there's groups that will do a good bit of that and charge you twice as much. And so we've kind of worked out an arrangement there. Again, happy to share that with people. But and then your choice is: do you want them to go sell franchises for you? Some of the groups, Franchise Fastlane, FranDevco, Brand One. I mean, these groups will rep them. They'll go out there and actually represent you essentially as your sales teams. They're like an extension of
Mhm.
your team. They get to know you extremely well, and then go out there and do that time-consuming task of qualifying and validating
Right.
candidates and telling them the story, walking them through the FDD. Some of those initial steps, you still get to meet them. You still get to decide if you want to let them into your franchise system. But by them cutting out those first couple of steps, they're so time-consuming. It really sets you up for success and allows you to then focus on those new franchise owners and supporting them and getting them off to a good start. So that's something I always encourage emerging franchisors to look into, is outsourcing your sales early on.
Well, and like what I find just so unique, John, about all this with working with just hundreds and hundreds of businesses, like people have, it's very unique to find someone that understands everything about a business, how to scale it, how to deploy it, how to like, play the entire Wizard of Oz. And this world allows you to figure out where you play the best and then supplement around it for not like, and you don't have to sell your soul, right? I mean, you don't have to like get out. I mean, it's a lot more flexibility than I think, truly more flexibility than I think most people think. They probably are thinking the opposite, where there's less flexibility, but it's really not the case at all.
Absolutely, absolutely. No, it's having that key prototype, that business that's been successful. That you know, oftentimes success leaves clues. You probably had other people saying, "Hey, can we go open locations? We love what you're doing." That positive feedback, and then it's just franchising can be a strategy to consider for scaling. A lot of businesses are doing it. A lot of
You've talked about a lot of people investing in franchises. So like if you want to be like, if you like the game but you don't want to go, let's say that, because there's people on the show or listening to the show that have sold and now have a
them.
chunk of money, and again, put it in the stock market at all-time highs or go buy treasuries at 0.05% rate of return. And like, so like this is an interesting way to deploy your money, kind of get to participate in the day-to-day, maybe get that. I think a lot of people, John, like they want to be valued for their expertise in the 40, 50 years of experience they might have had. So when you're thinking about investing in this kind of place, what are the avenues and how does it work, and how like, and the degree of passive versus active?
Yeah, I always try to be very candid with clients of mine, and they come in and say they want passive. Well, unless you have someone ready to go on your end, I mean, there's not a true passive. I mean, it's semi passive. If you think it's going to take 10 hours a week, it's probably going to take 15, especially early on. So, but, a good example here, a friend of mine, sitting on a pile of cash, we had an opportunity. It was a resale for a fitness facility in the Southeast. And he was interested in a great model, all the reasons as to why, it made sense, but he wanted nothing to do with the day-to-day operations. So fortunately, I had another client who was in need of capital, yet he was the number one trainer in the Lifetime Fitness
Oh, cool.
nationwide for 2 straight years. And so it's a beautiful marriage when I put the two of them
Right.
together, and they worked out a 51-49 agreement. One that I did recently, I'm doing a lot of beta testing where I'm placing investments. Personally, it was a driveway repair franchise. I love this little business. I placed a lot of clients with them, and one of my clients said, "Hey, would you invest in me? And I'd love to have you just kind of on the sidelines as a coach. Won't take much of your time." And so we structured a 51-49 relationship. He's 51. I want to be the minority. That's my desire, and letting him totally call the shots. But I've been able to open some doors, within the Rolodex, for him, and it was so funny. And this is a great example. probably second week in business. He calls me up and says, "Hey, John, the phone's not ringing. I'm really nervous. I've never done this before." I said, "Hang in there." Next week, he calls up. He says, "Hey, phone won't stop ringing, but I can't get to all these appointments." Next week, he calls up, "I'm running a lot of these appointments, but I'm not closing them." Next week, he calls up,
I'm
"I'm
closing
closing
too
so
many
many, I
now.
don't
Do
know
I
what
know
to do."
if
It's just like,
I
it's just a perfect entrepreneurship, story of, what we see on a regular basis.
And what I think is super intriguing about being an investor like this, so like, a lot of entrepreneurs that have had a liquidation event, they have a desire to deploy their money towards something that they understand versus, just watching Amazon and Apple go up. And the big question is then I don't want to bear the responsibility of teaching them everything about it. So this is again, you're kind of mitigating that risk as an investor because you're going, there's a playbook, whether it's Shelfgenie, like you said, or drawer, what was the drawers, any of these companies that you're talking about, there's like, here's how it works. There's some support going on. And so you're kind of, and the reason I'm bringing this up, John, is because you just very casually said, "Oh, my desire is to be a minority stake." I do not have that many people out of hundreds of interviews that go, I sold, I liquidated, and now I'm going to invest and I can't wait to have a more minority stake." They're going, "No, I have to have a majority because most people don't know what they're doing and there's no playbook."
Hey, my philosophy is I'd rather have a small piece of a big nut than a big piece of a small nut. I want the incentives there. I mean, I think you're in the same position. I mean, what we have now, we have limited time and we have little excess capital, and we have a lot of connections, and we're trying to be as wise and judicious about each one. I mean, the opportunity, the franchisor called me up this morning about a neat opportunity, he wanted me to be a part of, and I said, "I love it. I'll be a part of it, but I can't put in any time.
Hmm.
Maybe a few hours here at the beginning, but I can't do it." That is with three young kids. I know you understand.
Yeah,
Have to
amen.
be guard my time, and fortunately, I'm passionate about what I do. I love helping people. I could tell success story after success story, and granted, there are a few that haven't worked out, but by and large, I mean, in the last couple of weeks, I've had multiple clients coming back buying additional locations because they've had success with the first couple that they bought, and to
Super
me,
cool.
that's great validation of what I do, and I love seeing the success.
So as we're getting close to wrapping up here, what is the most like over the next 18 months, especially with like you had mentioned all the different things going on. What are the things that you're most excited for in this space?
Most excited for it. What gets me really excited is some of the business models that I see coming down the tracks. They're in the process of franchising right now. Just some great ones that really, I think, are going to have wide appeal. Ones that I think
Hmm.
we can go and blow out, overnight. And so I'd say that piece, the client piece, I love helping people. It really is a lot of fun when I see that life change. I see that people oftentimes leaving the corporate world and finding that freedom that I found back in the day,
Hmm.
in the not so distant past. On the personal side, I was number two in the FCC last year. For FCC's largest franchise brokerage in the U.S., I was number two in deals, and I want to be number one. So
I
that's
was gonna
something
say
I'm
I feel
gunning
like
for.
I was gonna say I feel like you don't want to be number two. Well, just kind of going on gut here.
No, so we're plowing ahead, but no, things are good. It's an exciting time to be in the space, and I just love educating, love opening up people's eyes to what the opportunities are, whether or not they're the right ones. At least they know for comparison what's out there.
Seems like an interesting mechanisms and strategy to help with this baby boomer transition plan that's going to go on. And because the reason I say that, and I don't know if you've seen any of the macroeconomic trends, but and the U.S. Census will come out now to show, but like 95% of all privately held companies are below 5 million in revenue. Which you boil down to the numbers, and a lot of people talk about this $10 trillion wealth transfer. I'm like, well, when you boil down the wealth transfer in that, you pay taxes and the lower multiples and pay off your debt. I'm like, there's not as much wealth there. There's a lot of jobs, but this could be an interesting mechanism to like help facilitate that where it benefits both parties.
Yeah, and I think oftentimes people think franchising or non-franchising, but oftentimes there's a combination. So you go in, you buy one of these businesses for a couple $1 million, and you see the opportunity to scale it through franchising, even though that
Hmm.
hasn't been a piece of the DNA in the past. So I think that's a really unique approach that someone
Hmm.
can take that kind of marries the two.
Hmm. So, two final questions as we're wrapping up here. I love asking people what the word intentional means to them because the answers are wonderful and it's the name of the show. So, what's the word intentional mean for you?
Intention for me, great question. In this stage of my life means investing more time in my kids, and I fail on a daily basis, but that's kind of front and center for me right now. I don't want to look back and Saturday morning I woke up and we had some things on our agenda for the day, and my 10-year-old son said, "Hey, can you go take us to the zoo? Take us to the zoo. Take us to the zoo." I have a 5-year-old daughter and 3-year-old son, and everything in me said no, but I was like, "Let's do it. Let's do it. Let's
I
go
love
spend
it.
3 hours at the zoo because I don't know how many more years my 10-year-old son will want to go with his younger siblings and me to the zoo on a Saturday morning." So, I think right now I'm trying to say as no to as many things as I can externally so that I can say yes to what matters.
Oh, I like that a lot. The book Essentialism is
Yeah,
fantastic. It's a
that's a
whole
good
book.
one.
It's a whole book about how to say no. I read it and I don't practice it as well as I should, but it's a good one. If people want to find you, reach out for questions, what are the places to find you?
Yeah, again, happy to jump on a brief call and talk through anything you'd like to related to franchising. I'm sure it'll be in the show notes, but come to our website, franbridgeconsulting.com. That's FRAN bridgeconsulting.com. Email me at Jon at franbridgeconsulting.com. Connect with me on LinkedIn. We'll get you on our email list, and like I said, would love to jump on a call when the timing's right.
John, this has been a blast, man. Thanks for coming on the show.
Enjoyed it, my friend. Thanks for having me.